The last 12 months has seen an unpredictable mortgage and property market, with a pandemic changing the way we work, mortgage lenders regularly adjusting their criteria, and the stamp duty holiday causing a crazed property market. But now the dust is settling and the stamp duty holiday has finished, what does the future hold for the first-time buyer mortgage market? In this video, I discuss the mortgage market moving forwards and provide the best tips to first-time buyers to achieve mortgage success. Remember, preparation is the key to mortgage success for first-time buyers. Let's go. Hi, my name's Alex Kerr. I'm a qualified mortgage broker, and my passion is simplifying the mortgage process for first-time buyers, as well as providing the best credit scoring and money-saving tips. If you're new to this channel, please consider subscribing. Let's get into the vid. So is the end of the stamp duty holiday a good thing or a bad thing for first-time buyers? Personally, I think it's a fantastic thing for the majority of first-time buyers, as most of us will be buying at £300,000 or under. For those of you purchasing over this figure, then certainly it has benefited you. But for the vast majority, all the stamp duty holiday has done is made things more difficult. So what I'm hoping to see is that we will see the number of buyers per property for sale reduce, as there's no longer a mad scramble to buy a property before the stamp duty holiday ends. Other benefits will also include solicitors having a lower workload, therefore overall leading to a smoother mortgage market. House prices will hopefully stabilise, as the rate they were increasing at is unsustainable. Moving forwards, it's now more important than ever not to make any small mistakes before you submit a mortgage. I'm going to discuss some tips around managing your money, credit profile, and how best to prepare for a mortgage in the current mortgage market. Mobile phone and utility bills. I'm going to start by talking about utility bills and mobile phone bills. Unfortunately, I see so many credit files where first-time buyers have small missed payments, anywhere from £20 to £100. Those missed payments then turn into defaults after 3 months. When I discuss this situation with first-time buyers, I often find out that the bills could have been paid but weren't due to a dispute where the first-time buyer felt it was the fault of the mobile phone or utility bill company, that the account had missed a payment and therefore the bill was not paid. But during this period, the account still needs payments, which subsequently are missed. Arrears are produced, which then lead on to a default at the point the account is in 3 months in arrears with no action taken. Please, if you're in this situation, for the sake of your first mortgage, pay the bill whether you think it's your fault or not, and then look to claim the money back. A £20 or even £100 default will have much harsher consequences on your future mortgage. It's not worth battling a £20 bill, which is going to cost you £2,000 in the first 2 years of your new mortgage, because you have had no choice but to use a lender that specialises in missed payments, which leads to higher fees and higher rates. It's also equally as important to keep your address updated when you move, as if you do not receive bills and they are not paid, the responsibility will lay with you for not updating your address. So please don't let this situation happen. It's far too common and we need to nip this one in the bud. You may have seen a company called USwitch advertising on the TV. They manage your energy account, provide alerts when deals are ending and if better deals are available, and make life so much easier for you to manage your energy bills. I would hugely recommend having a look at this service. I've left the link in the description below, as well as a detailed video I did about this service. Please check it out. So the second area I want to talk about is if you are a tenant. So if you are currently a tenant renting a property, then you need to be using Credit Ladder. This is a service which sends your rental payments to Equifax and Experian, who are the two main players that mortgage lenders obtain your credit data from. This will not only save you time during the mortgage application, as if the mortgage lender requires a rental reference, the lender can see the payments on the credit profile, but it can also improve your credit score, as this is providing a clear credit history of rental payments. Mortgage lenders will view this in a favourable light, and rental payments are similar to mortgage payments. I've left the link below in the description, along with a more in-depth video of how to use this service. There is a free option for Credit Ladder, but this only reports to one credit agency. I would highly recommend using the option which reports to both agencies, as for the sake of £60 for the year, this is hugely beneficial. This can provide a fantastic way of creating a history of rental payments to go on your credit file. Whatever your situation, if you are a tenant, this can have huge benefits to your mortgage application. Finally, the third secret to preparing for a mortgage is to use a multi-agency credit report. Understanding what's going on with your credit history on Equifax, Experian and TransUnion. This is vital in preparation for a mortgage. Using a multi-agency credit report is going to save you time and hassle. This means all credit agency data on one report rather than trying to figure out what's going on using separate credit files, which will look different and can be confusing. Check My File, in my opinion, is the very best credit report for first-time buyers on the market, as it provides all of the credit agency reports that the mortgage lenders will use on one report. And more importantly, it's so easy to read and understand. Often there are small mistakes or updates which you can make which will improve your credit score and reflect your profile in a much better light, such as keeping the correct address records on all credit providers. If you wait until the end of the video, I will link a video I recently did which shows the key areas of your credit file and what to do if information needs updating or is missing. I've also left the link below in the description for Check My File. Be sure to download your free file, as this is the first step in the process for first-time buyers. Today's question: have you obtained any small defaults due to an oversight on your utility provider or mobile phone bill? Let me know in the comments.
Alex, are you going to provide details on your next video? It's an important video about preparing properly for mortgages.
That's Sparks, my AI mortgage assistant. I will come on to her another time. Thank you, Sparks. Our next video will dive much deeper into preparing for a mortgage, such as document preparation and affordability checks you can do yourself. Be sure to tune in. Please do subscribe and ring the bell so you are notified when our next video is released, as it really will provide first-time buyers with value going into a difficult property market. Please note, we do need to let you know that your home may be repossessed if you do not keep up with repayments on your mortgage. So thanks for watching today's video. I hope it's provided you with some useful tips that will provide you with value. Please check out the show notes for a recap on today's video with access to any links discussed today. Please do consider subscribing and ringing the bell to receive further notifications when we release our video. I've been Alex Kerr, providing the best tools and tips to first-time buyers. I always say the same at the end of every video. Sparks, have you anything to say?
Preparation is the key to mortgage success for first-time buyers.
There you go.